What is going on, traders? Welcome back to the Traveling Trader. It finally happened. Tesla announced a 5-to-1 stock split today. I did a video exactly a month ago to this day talking about Tesla's potential stock split and how the price would react if it actually happened. Check it out here after this video, of course, but in this video, I'll go over a brief explanation of Tesla's stock split, why I think it's a good thing for Tesla and why I think they're doing it right now, and most importantly, give you some strategies, some stocks and options trading strategies on how to take advantage of Tesla's stock split announcement. I did a video earlier on how to play Tesla's earnings. This was right before their earnings. In that video, I talked about some stocks and option strategies, and I'll be doing a similar thing here. If you want access to the trade alerts where I send out all of the complete list of my stocks, options, and crypto strategies, link is in the description below. We have over 700 traders discussing strategies, option specifics, how to trade options, upcoming earnings, stock picks, etc. So sign up. It's a great value. Link is in the description below. And if you get anything out of this video, go ahead and leave it a thumbs up and let me know in the comment section below whether you already own Tesla and are happy about the split or not. Without further ado, let's get right into it. So Tesla's stock split is actually a 5-to-1 stock split. I thought they would be doing a 10-to-1 stock split just based off of their price, their high price. There isn't really a science behind these things, and Tesla is technically allowed to do whatever kind of split that they see fit. But essentially, a 5-to-1 stock split means you will get 5 shares for every share of Tesla you own now, and the price per share will be diluted by a factor of 5. Meaning if the price is currently $1,500 and you have 1 share, you will now have 5 shares and the price of Tesla's stock will be $300. So the value of your shares don't change in the immediate term. But undoubtedly, and as I talked about in that video before, this has a significant effect on price, especially in the mid to long term. Now, Tesla is very smart to do this at this point. So why do I think Tesla is actually doing a stock split now? Well, if you take a look at their chart, like the one that I have here, you'll see that Tesla essentially was hitting some resistance. So as you can see here, Tesla really found a roadblock at around $1,700 and it started retracing from there. And the fact that it reported earnings not that long ago, it was July 22nd that it reported earnings. Between now and the next time that they report earnings, which is in October, there's also the battery day as well as the shareholders meeting. So from now until then, there really isn't much good news to go off of. So it was possible that Tesla could actually tank significantly from this level. You see that it's below the pivot line here, the central pivot. You could see that it crossed the support on the RSI down here, right? We were at this RSI for months, and now we just fell right below it. So the momentum is definitely falling on Tesla's stock price. So announcing a split from here, not only will we see a boost in the stock price, as I discussed in my video from a month ago, and Tesla is actually up 7 or 8% after hours today. But if it splits from this level and it's around the $250 or $300 mark, then essentially it can save itself from the embarrassment of tanking from a $1,500 price point to say something like at the S1 level, which is at around $1,000, even worse. One of these major moving averages, the 100 MA is currently below 1,000. The 200 MA is around 745. So Tesla is actually very smart for doing this at this moment in time. Now, the stock split is going to take place after market close on August 31st. Funny enough, right after the Apple stock split, which I think takes place after market close on August 24th. Now, I don't want to rehash all of the reasons why I think Tesla's stock price is going to boom after a split. Again, I did a whole video about this a month ago, but essentially the lower price point becomes very attractive, not only for individual investors who actually make up the smallest portion of the investing pool, but for funds and ETFs. So institutional buyers who buy these stocks to fit them into their funds, they can now afford more shares of Tesla at a lower price point, and Tesla will have a chance to reset and then rally again in the same way that Apple has done the last 4 times that it has split, and the 5th time coming up again. Now, on to the most important part. How should you trade around Tesla's stock split? Well, first and foremost, for those that bought the dip in March, and if you were part of our group, you would have bought the dip at around March, April timeframe, you are in a great spot right now. But for those who are looking to speculate around Tesla's stock split, here are some trading suggestions and ideas. Now, we're going to be basing some of these strategies around historical data, and I'm going to reference the study done by David Eikenberry, who is now the chairman of finance at University of Illinois. But essentially he found that shares of split stocks on average outperformed the market by 8% the following year after the split, and 12% the following 3 years. Now, his study, along with other studies, have led to basically this report of the typical life cycle of a splitting stock. And this is on rightline.net. So I want to give credit where credit is due. Now, Rightline identifies 6 major categories of the typical life cycle of a stock split. So I don't want to go over the pre-announcement, but let's talk about the announcement. This happened today. So the upbeat atmosphere of a stock split often pulls in a large number of new buyers. And like I said, Tesla is up around 8% after hours. So this is already happening. This influx of traders and investors can lift the stock price higher, giving exceptional gains for those positioned in the stock prior to the stock split announcement, just like us. Here's the important part for those of you that aren't in Tesla. For those who are not in the stock before the split announcement, this stage usually offers low risk setups for timing short-term trading entries. So if we go back to the chart, the reason that it's low risk is because essentially you can set your stop limit right below where you entered. Let's say tomorrow that you decide to enter Tesla here. Well, you could see that there is a clear resistance level here at around between 1300 and 1400. So if you decided to enter here, hoping that Tesla would see a bounce leading up to the actual stock split on August 31st, right? You're hoping for something like this. Well, you can actually set your stop limit very close to where you entered and get out for a minimal loss if Tesla decides to buck the trend. So that is actually trading strategy number 1. There's always a simple strategy, and this is it, which is basically buying the day after the announcement and setting a stop limit very close to your entry. Now, you're looking for short-term gains here, and I'll tell you why. Because going back over the history of stock splits, you'll see that there is a dormancy period after the announcement. There's generally a return to normal price behavior in the weeks following a split announcement as the initial interest subsides. So most of the traders who are getting in after the fact, not people who already own large amounts of the stock like myself, but traders who are getting in actually after the fact, they are going to be interested in taking profits quickly. So entering here, once the stock rallies, say it rallies back to 1700, this is just speculation, but let's just say it rallies back to 1700. Well, a bulk of traders are going to start taking profits, and you will actually see downward momentum, and that will cause another round of panic selling, and those who bought at, like, say 1400 or 1500 are going to want to secure some sort of profit before exiting. This is why you see this dormancy period occur. Now, with the Apple split announcement and the Tesla stock split announcement, they didn't actually leave a lot of room between when they announced it and when they're actually going to split. This isn't very typical. Usually you'll have months leading up to the actual split. Once it's announced, you'll have months before it actually splits. In this case, you have a couple of weeks, 2-3 weeks at best. Anyway, we usually tend to see a pre-split run where right before the split, investors dramatically bid up the price of the limited supply of shares because the shares are still limited and they're not diluted yet. So you really want to pay attention to this dormancy phase if it actually happens. If we start to see Tesla retrace back to the period or the price that it was at when it was announced, you want to pay attention to this as a short-term trader, because the next 2 categories, the pre-split run, a few days before the split, and the actual split itself, are going to likely see a lot of volume. After the split, the price of Tesla will say be around $300. You're going to get a new wave of investors. And like I also mentioned, don't discount the institutional investors. We're not only talking about individual retail investors, we're talking about those that are going to be buying up more Tesla for their funds. These final buyers can push the prices even higher. And then, as you guessed it, the post-split phase, prices will often retreat for a while as shares are sold to lock in profits. Those that bought will want to take profits in the short term, and there will likely be some opportunities for re-entry. Now, if you're a long-term holder, this is all gibberish to you. This means nothing to you. You're just going to buy or dollar cost average and hold. So this is mostly for traders and not really long-term investors. Now, from an options perspective, here's where things get interesting. And again, if you want access to the trade alerts, follow the link in the description where I send out all of my options plays. But from an options perspective, here, this would have been, a major killing if we had bought it if we bought this call option spread here before market closed, because it was trading at 70 cents. For those that don't know, the max value of a spread is the difference in strikes. So this is a $5 spread that you could have got for 70 cents, means there's $4.30 of profit left in this spread. And the fact that Tesla jumped after hours to like 1465, part of this would already be in the money. And if we're expecting a post-split announcement rally, then you can literally make between 5 and 6 times your money on this option spread. Now, it's very unlikely that we wake up in the morning after the split announcement and we'll see a option spread like this priced at 70 cents. This will likely be a lot higher. Look at before the announcement how discounted the call options were. We're talking about, they went down today. This is, a one-day change. They were down all across the board around 30% today. But essentially, I would look to see how the at-the-money call spreads are priced, especially with an expiration leading up to the actual split, which is August 31st, and this expiration is August 28th. So I'll be focusing on specifically the August 28th, potentially the September 4th options to see if I can get a good deal on a call spread or maybe selling the put spread, although likely we will be getting a better deal on buying options, but we'll see when the market opens and these prices are active. However, I'll definitely be looking to do something like at the money debit call spread or an at the money credit put spread. Now, I might even look at doing something like an iron condor, because if we go back to these cycles and we're expecting there to be a rally and then some sort of dormancy, some sort of retracement, and then a rally again, we're expecting Tesla to be within a certain range. So an iron condor is perfect for that. Again, the options pricing right now after market isn't accurate, but I would wait for the market to open and then you can sell an iron condor, which would technically, I might pick, say, the 1300, buying the 1300 put on the low end like this. Maybe the 1300, let's say 1325. The 1300 is at around 25 delta currently, or minus 25 delta. And then on the call side, if we do expect a rally, let's see where the 25 delta would take us, around 1600 bucks. So say on the call side, we have a short 1600 call and a long, let's keep it the same, around 1625. So this is actually not bad. The premium that we're getting, $14.30 out of a potential $25. And this is what an iron condor would look like. Again, I mean, the prices here are not accurate because it's after hours, but essentially we'd have something like this. The price of Tesla is currently dead set in the middle, and we have these wings here. So Tesla would have to stay essentially between 1325 and 1600 in order for us to collect the entire $14.30, which on one options contract would be $1,430. On 10 options contracts, we're talking about $14,300. Depending on what kind of premium we get tomorrow, I actually really like this play for a September expiry, where we expect Tesla to, rally and potentially retreat during this period and during that cycle that I was referencing earlier. So that is how I would play Tesla. Again, I will be sending these out in the trade alerts. If you want access, link is in the description. Leave a thumbs up if you get anything out of this video. Leave a comment down below. Let me know if you're already in Tesla and if you are happy about this stock split. Subscribe to the channel. As always, hit that notification bell. Stay safe out there, traders. Peace.